Welcome to this short executive knowledge lecture on topic 4, paper 2 of the SFC licensing exams. This topic covers dealing in securities traded on the Stock Exchange of Hong Kong and is one of the more technical topics in paper 2. As ever, I will emphasize the important points to help you understand the core material you need to know to sit the exam. Now, a copy of the study notes can be downloaded from the Executive Knowledge website under Paper 2 Resources. And once again, as ever, I recommend that you go to Examinator.online to access practice questions for Paper 2, Topic 4. Let's look at the sections in Topic 4 that are on the screen. We'll start with the important concept of market participants, exchange participants, and later clearing participants. We will look at those participants' requirements and the concept of trading rights. Then we'll consider the products that are traded on the Stock Exchange of Hong Kong, a favorite for examination. Then we'll look at the trading mechanism and trading rules. Now that does get very technical. A total mastery is not required, but I will emphasize the points that you should be having in your head going into the exam. Section 5 looks at trading halt, suspension. We'll consider what the difference between the two are, and cancellation, withdrawal of listing. Then the idea of clearing trades and settling, clearing and settlement. We'll consider that. We'll look at the stock exchange disciplinary procedures, and we'll finish with the different types of transaction costs. Market participants, a must know for paper 2. We have the different players that operate in the stock exchange. We have the exchange participants, and those are subject to the SFC license requirements. More of that will follow. Non-exchange participants holding Type 1 licenses. So those are all the dealers who are not exchange participants. Remember, exchange participants have direct access to the exchange systems. A non-exchange participant that holds a Type 1 license, a dealer, will not have access to the systems and will have to trade through an exchange participant. Hong Kong Exchange and Clearing Limited. We've got details listed under 1.1, and we've got details of the 4 clearing houses. Let me cover all of that by way of a diagram. And I'm going to expand my explanation of this diagram to cover the systems and procedures as well as the entities that are involved in the Hong Kong markets. So right at the top, we have Hong Kong Exchanges and Clearing Limited. Now, this is the listed company that owns all the market operators. Now, the regulatory, the legislative references are down the right. Recognized exchange controller, recognized exchange companies, trading systems, and recognized clearinghouses. Now, as I've said, there is one recognized exchange controller. That is the listed company, Hong Kong Exchange and Clearing Limited. Now, it owns below the Stock Exchange of Hong Kong, 100%, and 100% of the Futures Exchange. Those are the recognized exchange companies. Now, if I go down the left-hand side, I'm going to consider the dealing of securities. Now, securities, which are dealt on the stock exchange, actually are traded through the Orion trading platform, the trading system. Now, on either side of a trade will be an exchange participant. You will have an exchange participant for the buyer, an exchange participant for the seller. And those exchange participants will place their buy and sell orders into the Orion trading platform. Once they have a matched trade, it is passed on, bottom left, to the Central Clearing and Settlement System, which we refer to as CCAS. There, the trade is cleared and settled. Now, the two parties involved on behalf of the buyer and the seller will be the clearing participant for the buyer and the clearing participant for the seller. But there is one other party, and that is the clearinghouse, the central clearing counterparty. And for securities, it is the Securities Clearinghouse, Hong Kong Securities Clearing Company. So when we have a securities trade cleared, the clearinghouse will buy from the selling clearing participant and will sell to the buying clearing participant, thereby guaranteeing settlement. And that process is known as novation. Now, all this material is absolutely core to topic 4, and it's far easier doing it by way of a diagram. So if you didn't quite pick that up, replay it and make sure you appreciate the parts played by the two exchange participants on either side of the Orion trading platform, the two clearing participants, and the Hong Kong Securities Clearing Company, which is the central clearing counterparty. So there are 3 parties for the clearing of stocks, 2 parties for the actual trade, the 2 exchange participants. Now, if I go down the right-hand side, I'm dealing with futures. Futures are traded on the futures exchange. They are matched on the system HKSI, and they're cleared using DCAS and the Futures Clearing Corporation as the central clearing counterparty. But at paper 2, we don't have to worry about the trading and clearing of futures. We're only concerned with securities, the regulation of securities. If you were to do paper 3, you will have to address the world of futures. Now, at paper 2, we also have to be aware of traded options. Now, traded options, which are covered in more detail in topic 6, are traded on the stock exchange. So the traded options trade on the stock exchange, but they are the system they use for matching of the trade is HKATS, Hong Kong Futures Automated Trading System. That is why you see the arrow going from the stock exchange to HKATS with regard to options. Now, with traded options, you will have an exchange participant for the buyer and an exchange participant for the seller. They will match their trades. Once you have a matched options trade, it's passed on to DCAS, Derivatives Clearing and Settlement System. Now, again, you've got a clearing participant for the buyer, a clearing participant for the seller as part of the clearing process, and a central clearing counterparty, which is the clearinghouse for options, more correctly, stock exchange options and clearinghouse. Again, the clearinghouse will buy from the seller and sell to the buyer, thereby guaranteeing settlement. And that process, as I mentioned earlier, is known as novation. Now, when it comes to options, we have the possibility of exercising options. Because, for example, if I bought a call option in HSBC stock and the price went up, making it attractive for me to exercise at the fixed price, I will then call my broker and ask to exercise my call option. The broker will then get in touch with the trader, and the trader will enter the exercise instruction into DCAS, Derivatives Clearing and Settlement System. That's a point to remember. The exercising of traded options is done through DCAS. That will then generate the underlying trade, and that is cleared in CCAS, with the 2 options clearing participants and the options clearinghouse being the 3 parties involved in the clearing and settlement of the underlying trade generated by the exercise of the option through DCAS. That is what you need to know with regard to that diagram, and that material covers at least 1 question. It is not difficult as long as you appreciate and understand all the relationships, and may well be worth just rewinding and listening again. Now, over at the bottom of page 3, it says there are 4 clearinghouses. Now, I've covered 3. The 4th one there at the bottom, OTC Clearing Hong Kong Limited, OTC Clear. And at the bottom of the diagram, we refer to OTC Clear. And that is the clearinghouse that you can use if you have to clear over-the-counter derivatives. And remember, we covered that in topic 2. There are 2 rules with regard to OTC or derivatives: the reporting rules and the mandatory clearing rules. And this is the clearinghouse that's available for mandatory clearing. Moving along. Section 2, exchange participants and trading rights. Now, the concept of exchange participants is extremely important, so I'll just emphasize these points. To trade through the exchanges, intermediary must become an exchange participant and hold at least one stock exchange trading right. You cannot get a stock exchange trading right until you become an exchange participant. So you need both to directly trade through the Orion trading platform, the trading system of the stock exchange. And trading rights, indeed, both participantship and trading rights are non-transferable. Okay, an analogy I would use is buying a car and not having a driving license. So buying the car is similar to becoming an exchange participant. Okay, you've got it, but to be able to drive it, you need the driving license, and that is the equivalent of the stock exchange trading right. Under 2.2, exchange participants must be of good financial standing, integrity, observe all the rules and regulations. Repeating myself, be a holder of stock exchange trading right, and be licensed for type 1, and you must be a Hong Kong incorporated company. More material on the stock exchange trading rights under section 2.4. Moving into the products traded on the stock exchange, this, I would say, there's always at least one question on section 3 in the paper 2 exam. Now, equity securities are traded, and we are given different details of different categories. The ones that I would highlight are the last 3. Third last one, shares of companies incorporated in PRC approved by CSRC for listing in Hong Kong. Those are 8 shares. Those are PRC, mainland China incorporated companies listed in Hong Kong. They are known as 8 shares. H obviously stands for Hong Kong. Red chips, on the other hand, are not incorporated in China. If they were incorporated in China, they'd be 8 shares. Red chips will be incorporated elsewhere. Where will they be incorporated? Well, a very large percentage currently of the Hong Kong listed companies that are red chips are incorporated in the Cayman Islands. Now, a red chip is where mainland China entities hold more than 30% of the capital and are the single largest shareholder, or mainland entities hold more than 20% and have heavy influence on the board of directors. So it's where you've got strong mainland China influence in a listed company in Hong Kong, which is not a PRC incorporated company. That is a red chip. And then GEM, that's originally referred to as Growth Enterprise Market, and that market allows growth companies with shorter track records to be able to list. Continuing the different products, debt securities can list where the holders, second bullet point, are creditors, not owners of the equity. Also, you can list unit trusts, mutual funds, exchange traded funds, leveraged inverse products, REITs, real estate investment trusts. Read through the detail, make sure you are comfortable. And then we have structured products, and structured products are listed, including equity warrants, derivative warrants, inline warrants, callable bull-bear contracts, and equity-linked instruments. For the exam, you really should be comfortable with the difference between equity warrants and derivative warrants. Warrants are like long-term options that are listed on the stock exchange, and they will have a minimum term of 1 year, maximum term of 5 years. Now, while you're holding them, there will be an exercise price. And if it's in your interest to exercise, if it's an equity warrant, you will be able to buy the underlying stock from the company that issued the equity warrant. That is the company whose underlying shares are the asset. And so you will buy from the issuing company. It's usually new shares that they issue. We can contrast that with derivative warrants, which are issued by entities that are not the issuer of the underlying securities. They can be call or put warrants. And if it was a call warrant, I bought it and then I exercised. Strictly, I could go to the issuing entity to buy the underlying shares. But as it's not their shares, they would have to go into the market and buy them. Usually, the transaction is settled in cash. The only reason you would be exercising is because you're making money. And so the entity that issued, usually an investment bank, that issued the derivative warrant would settle for cash. The other ones I'd be aware of, but I wouldn't be too concerned knowing all the detail.